We're talking corporate tax cuts specifically.
Yes, Trump during the election was talking about 15% corporate tax rate, and currently it's 35%. U.S. has one of the top rates. Of course, that's not the effective rate. But for banks, it's almost the effective rate. That's why they probably will end up benefiting more than anyone else.
So yeah, this interested me. They end up paying a lot more corporate tax effectively than, say, well, obviously we know Apple and so forth, but even a regular multinational pays a lot less than a regular bank.
I mean, most banks, and it's not just the multinational, but basically any other industry, they have a lot of, whatever they do, capital expenditures and all kinds of other investments, they get deductions from their taxes. And banks don't have any of those. So the rate average for non-financial, for the whole country, the biggest corporations, is 14%. For the big 6 banks that I crunched the numbers for in the U.S., they end up paying more like 28% effectively. So when the rate is cut, even if deductions are gone, since they don't really get those deductions, the banks get a good break.
Yalman, break it down for us. I mean, individually, which bank could benefit the most from this?
I mean, they're all doing pretty well. Dollar-wise, Wells Fargo comes on top, but that's because they also had one of the biggest profits, last year and the last couple of years. So they make a lot of money anyway. And of course, Wells also is very U.S. focused. So their earnings are almost overwhelmingly all in the U.S. and thus they get a higher, they get taxed higher. If you have international earnings, some of the other players like Citigroup still have a lot of they make money overseas. They already don't pay as much because if you don't bring the money repatriated, you don't pay as much. So they make a little less, but Wells does great. J.P. Morgan, even Morgan Stanley benefits quite handsomely.
Yalman, a lot of the focus has been on deregulation. Now we're focusing on tax cuts, which leads to the obvious question, what's priced in? I mean, we've seen banks rally since Trump was elected president in November. Is both regulation or deregulation and tax cuts priced in?
It seems like a lot of these are being priced in stage by stage, perhaps. Perhaps we're getting one rally for one of these and then another one. Regulation was the first thing that came to mind as soon as Trump was elected. Everybody talked about, oh my God, we're going to have such a wonderful regulatory framework. Maybe that doesn't look as fast, as quick. It's moving. It might move even slower. But taxes is a big deal too, and I think more and more investors are realizing it's going to be great for banks, so that's probably being priced in. And the interest rates being raised by the Fed, that might play in as well. So there's sort of
and I was just going to come to that point. I was speaking with somebody on Wall Street who's saying that literally if you've got $25 trillion in assets at, say, J.P. Morgan, and there is a 100 basis point increase or steepening of the curve, that's a $10 billion addition to your revenue. So that means banks are still a great buy, does it not, Yalman?
Oh well, I'm not an analyst, so I don't make buy and sell recommendations. But from everything I see, there's still more that can be priced in, as you said. Of course, we also don't know how fast interest rates are going to rise. It looked faster maybe a month ago. Maybe it's looking slower now. So all these things, there are a lot of great potential benefits for the banks. How quickly they will actually turn out, how much of it will turn out, is still unknown. So as it prices in, and also the market has to think, well, are we getting this year, next year? Is it going to take even longer? So all these things are wonderful, but they might take a little.